Okay, let's talk about one of the most important and, frankly, one of the most exciting trends in crypto right now, real-world assets, or RWAs. Because getting your head around them really just boils down to one simple question that could totally change how you think about your portfolio.
No, really, think about it for a second. Take a look at your holdings. You've probably got some Bitcoin, some Ether, maybe a handful of your favorite altcoins. You might even be deep into yield farming. You feel like you're diversified, right? Well, I've got some news for you. You might not be nearly as safe as you think.
And here's the heart of the problem. When the crypto market is booming, pretty much everything goes up with it. But when it goes down, well, we all know how that feels. Even if you're holding dozens of different tokens, you're often tied to the very same risk, the overall flow of cash in and out of crypto. That's not real diversification.
But this is where things get really interesting. This is where the game completely changes. Real-world assets are showing up as this incredibly powerful way to build a portfolio that's actually resilient, one that breaks that dependency on just crypto market vibes.
So what are we really talking about? It's actually a pretty simple idea. You know your house deed, right? That piece of paper sitting in a file somewhere that proves you own your home? Now just imagine that deed wasn't paper at all, but a super secure digital token that lives right there in your crypto wallet. That's it. That's tokenization. It's taking real, tangible stuff from the world around us and giving it a new life on the blockchain.
And this can apply to a whole universe of different assets. We're talking US treasuries, stocks, credit, commodities. Think about it. These are all things whose value is driven by stuff like interest rates or company earnings, not just by how bullish or bearish the crypto market is feeling on a Tuesday. This is how you actually build a wall around your portfolio.
And listen, this isn't just some cool theory anymore. It's a real, actual market. As of right now, there's over $21 billion worth of tokenized real-world assets on-chain. And what's even crazier, that number has grown 10x in just the last 2 years. So yeah, RWAs are officially past the buzzword phase and have become a legit asset class.
But that $21 billion, that's just the tip of the iceberg. Big players like the Boston Consulting Group, they're projecting this market could hit an absolutely staggering $16 trillion by 2030. No, that is not a typo. $16 trillion. That's the mind-blowing scale we could be looking at.
Okay, so the numbers are huge, the growth is off the charts. It all sounds pretty perfect. Which brings up a really important question. If RWAs are this incredible, why isn't every single DeFi user already all over them? Well, it turns out there's a kind of uncomfortable truth we need to dig into.
Here's the problem. A lot of the early RWA projects basically just copy-pasted the old financial world's problems right onto the blockchain. They brought along all the middlemen, the custodians located somewhere else, all the jurisdictional red tape, and the you need permission to play access. They basically rebuilt the exact same walled garden that DeFi was created to get away from.
And this brings us to what is probably the most critical distinction you need to understand in this whole space. It really all comes down to two kinds of RWAs. On one side, you've got represented assets. With these, the blockchain is basically just a fancy spreadsheet. You can't actually move your token off the platform. You don't really control it. But on the other side, you have distributed assets. Now, these are the real deal. The ones you can actually hold in your own wallet and use however you want across DeFi.
And this chart, this just lays that hidden truth bare. Remember that $21 billion we were excited about? That's the small bar. Those are the distributed assets that we can actually use. That giant bar next to it, that's the represented market. It's worth over 10 times more. The reality is, most of the tokenization happening today isn't for you and me. It's for big institutions' internal bookkeeping.
So, for the average DeFi user around the world, a lot of today's RWAs still feel an awful lot like traditional finance. You hit the same old walls, the gatekeepers, the risks of someone else holding your assets, and this whole confusing mess of rules that dictates who's even allowed to participate. This isn't really the open financial world we were promised, is it?
But the story is changing. A whole new wave of RWAs is being built, and this time, they're being built from the ground up to be truly DeFi native. They're designed to work with the core ideas that make our space so powerful: self-custody, on-chain everything, and open access for all.
And a really cool example of this evolution in action is what's happening with XTOS on the Tone blockchain. This isn't just about putting an asset on-chain. It's about weaving it into a system that actually feels intuitive and natural for a real crypto user.
So what are they? Simple. XTOS are tokens that track the value of real US stocks or ETFs, like Apple or the S&P 500. You get direct price exposure to those assets, but you get it in the form of a token, like AAPLX or TSLAX. Now, it's important to know, this gives you the price exposure, but it doesn't give you shareholder rights, like voting in a company meeting.
And this new model has 4 huge advantages that make it a true DeFi native. Number 1, self-custody. The asset lives in your wallet, under your control, period. Number 2, 24/7 on-chain trading. The market doesn't stop just because Wall Street rings a bell. You can trade it like any other token. 3, the backing is totally transparent and fully collateralized one-to-one. And 4, these tokens are built to be used anywhere and everywhere in DeFi, not stuck in one place. This is what a DeFi native asset looks like.
So let's pull all this together. RWAs are no longer just an idea. They're a real, growing market. But the most exciting part isn't just about what is being tokenized, but how it's being done.
So if there are 3 things you take away from all this, let it be these. First, RWAs offer that genuine portfolio diversification that a crypto-only strategy just can't give you. Second, you have to know what you're buying. Not all RWAs are created equal, and that difference between represented and distributed is absolutely critical. And third, the real future, the exciting future, is with DeFi native assets, the ones you can actually own and use freely on-chain.
And let's be super clear here. This new wave isn't about trying to get around regulations. It's actually about using regulations to expand choice for you, the user. It's about giving people more ways to access traditional markets, but to do it on their own terms, right from their own wallets.
It really leaves you with a pretty massive question, doesn't it? As this technology gets better and better, we're getting closer and closer to a future where pretty much any asset in the entire world, from stocks to real estate to fine art, could live as a token right inside your wallet. The journey is really just getting started.